Hey everyone, and welcome back to the channel. My name is Brendan, and I hope all of you guys are having a great day no matter where you are from, because today we have a very special Bitcoin analysis in store for all of you, as there's not only a squeeze happening on Bitcoin's chart, but also a very specific candle chart formation with the moving averages playing a crucial role in all of this. So if that sounds interesting, as per usual, make sure you stick around for the video, and all that I ask is that if you like the content that I make and the wisdom that I share, consider sticking around for future videos as well. But let's go ahead and dive on in with what is happening right now on the current state of Bitcoin. So what we have here is I really want to just start out by drawing our resistance lines and then our support lines. So for resistance on Bitcoin, we can see that there is not only lower swing highs, but also higher swing lows forming at the exact same time. Now, what does this mean? Essentially, this means that there is a squeeze happening because the resistance is converging down onto support, like we can see right here, and then support is moving upwards, converging into resistance. And so as we get to the end of this, which we would typically call a pennant or a symmetrical triangle, there is a convergence point where resistance is going to meet support and support is going to meet resistance, and now that price is just ricocheting inside of this little symmetrical triangle, everything is squeezing. Now on top of this, the other important thing to see over here is that historically, ever since Bitcoin crossed back above the 200-day moving average at the beginning of this year, the moving averages have been acting as different levels of support for one another. And what I mean by that is when the 20-day moving average doesn't hold, it moves to the 50. When the 50-day doesn't hold, it moves to the 200, and so on and so forth. And so what we can see is a great example of this happening over here is where the 20-day moving average was acting as a solid support until it doesn't hold, and then it has to go back to the 50-day moving average. Now, luckily, we haven't had to see the 200-day moving average in quite some time. It's actually been just over or around 2 months since the last retest of the 200-day moving average. So now that Bitcoin is hovering right here around the 50-day, we can see that about a week ago, the bulk of these candle bodies closed right above the 50-day moving average. Now, why is this significant? Why does it matter at all? I know a lot of people probably think that this is rubbish. But this does matter because after closing around 4 or 5 candles above the 50-day moving average, it was signifying that this was indeed a support level, and then price rallied from just below $26,000 all the way up to around $30,000 afterwards. We see the same thing happen when all these candles were closing above the 20-day moving average. We see that it was signified and kind of confirmed as a support, and then after it was confirmed as a support with all these candle body closings, there was a rally right afterwards. So our hope is over here, Bitcoin can continue to close candles above the 50-day moving average or right around it so that it can ultimately see a rally back up to the top of the symmetrical triangle. And ultimately, what everyone wants is for Bitcoin to break out of this squeeze with bullish momentum and retest those highs of around $30,000 to $31,000. Now, if this is not the case, if we start to see rejection of the 20, rejection of the 50 as well, and then a downwards breakout of this symmetrical triangle or of this pennant, then what that would likely do to Bitcoin is ultimately lead prices lower. So it would not only have to retest its low of around 27,000, but it could arguably even say that Bitcoin wants to retest the 200-day moving average, which it hasn't done in, again, a couple of months, since back at the beginning of May. Now, that would be a pretty nasty fall, bringing Bitcoin from around 28,000 to around $22,000. And that would represent around a 22% pullback in Bitcoin, and it would likely be a lot worse for altcoins, maybe even being 30+% across the board for alts. Now, I guess that kind of begs the question, what is the likely scenario to happen here? Well, we have seen that for the bulk of this year, there has been a nice little uptrend in Bitcoin. And you know what we like to say, the trend is your friend. So with this trend kind of reversing in the short term, again, not the macro trend, while there is an argument to be made there that the macro bear market that we've been in for the last 2 or so years is breaking, I wouldn't say it's really confirmed, broken, and reversed yet. We do have a nice little uptrend over here. We have the golden cross. There's a lot of evidence to point towards a market bottom being in, but even if Bitcoin is to pull all the way back and retest the 200, that would still make for a higher swing low, and it wouldn't hurt this trend at all, because again, it would be bouncing off the 200 and also forming a higher swing low that is around $3,000 higher than its previous swing low of around $19,000. And this one was considerably higher than this one over here, which is all the way down around $16,000. So what we're seeing is that even if there is a massive pullback, each higher swing low would be about $3,000 above the other one. So with this happening on Bitcoin, the key levels that I'm watching out for are obviously the local highs and the local lows of around 30 to 31,000 and then around 27,000. But also inside of this symmetrical triangle, Bitcoin really needs to start closing more candles above the 50-day moving average. And last time it had to close around 5 or 6 of them before it ultimately rallied up to the upside, like we saw over here with the 20 and over here with the 50. So this is what we're watching out for in the next couple of days. By the time we make our next market update video, we will very likely have an answer to this. Maybe it continues to squeeze. I think that the likelihood of that forming into the very last percentile of this formation is a little bit unlikely. And so I do think that over the next couple days, by Friday, we're going to have our answer as to which direction this likes to move. And so with that, it creates an area of opportunity. For the people who want to long, they have a very clear area of support where they can enter into, they can set stop losses up onto. And for the people who want to short, maybe they will get their evidence of a clear rejection here. And that could be an argument to be made as well, because there's also a lot happening in the world of traditionals with just a ton of information being released, and also just looking at what's been happening with NASDAQ and stuff. Ironically, NASDAQ and S&P and Bitcoin have been moving almost inversely from one another. When NASDAQ and SPX were falling, we were talking about it a week or two ago, we had Bitcoin that was on, a tear, outperforming it. We saw things like Bitcoin going up 2% or 4% when NASDAQ was down 2%. And now we're seeing NASDAQ having kind of a week of green here, and things like Bitcoin are seeing a week of red. So time will ultimately tell. I hope everyone did find a little bit of value of this. Maybe you didn't catch the squeeze, maybe you didn't catch the pennant, maybe you have no idea what any of this is, but you find it interesting. Either way, my goal is to bring all the information to the spotlight and then let all of you make your decisions from there. So again, nothing I said here is legal, financial, or tax advice in any way. Just a man on the internet doing his own historical analysis and speaking out loud to himself inside of a room. So I hope all of you did find a little bit of enjoyment in this. If you did, again, all that I ask is you smash the like button, you hit the subscribe button, and with that being said, I'll see all of you in Friday's video.